Good morning from Chicago traders. It's 8 a.m. Chicago time on the 1st of March 2022. Welcome to the month of March of 2022. Hopefully, it's a good one for you. This is episode number 2181. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have a market that has a slight risk-off bent. We see the Euro stocks and the German DAX way off this morning. Continued massive risk overhang due to the Ukraine-Russia crisis, and just a terrible amount of risk across Europe and across the global economy. Not as much as it is across Europe due to Europe's dependence on Russia, and of course, the contagion invasion and the fight becoming bigger and spilling out of the Ukraine into other areas is also a massive risk. We don't know what, as things are not going so well as planned for Russia, according to Western media. Of course, take that with a grain of salt, but there may be more indiscriminate moves made by Putin against the Ukraine and Europe. So there is a significant amount of risk here. So that's where we stand. Massive headline risk today. Talks did not move forward. Not moving forward. Let me fix that, please. Not moving forward. In the Ukraine-Russia conflict, energy is pushing new highs, new multi-year highs. Headline risk continues. Today, we did have some numbers pre-market, and we had some earnings pre-market. Target, Baidu, Kohl's, AutoZone. This morning, we also had the PMI numbers out of France, Germany, and the Eurozone. All came in relatively in line. We got the inflation rate out of Germany of 5.1% in line. We do get the market manufacturing PMI at 9:45 Eastern, expecting 57.5. But the big number today is the ISM manufacturing PMI for February, expected at 58, coming out at 10 o'clock, and then we get the API crude oil stock change. Keep an eye on crude. It balanced. It popped higher. It had a gap up and balance yesterday. Very, very tight balance. The profile there has high kurtosis, and it's releasing to the upside, and it's maintaining above $100, trading at 186 right now, up 542 basis points. The S&P 322 contracts traded so far. The inventory is about 43% short in terms of volume. And the range is relatively wide at 76.5 points. The point of control 4350, which really, I have the over underline a little bit higher in the S&Ps, but really the 4350 is likely to act as the over under this morning on the open. 4350 is the over under this morning. Again, the range is very wide, so we expect volatility to be high. We expect the range to be at least that 76.5 to 80 points coming into the session today. The market pushed as high as 43.99 in the S&P, holding that 4400 century figure, and pushed as low as 43.22, which is higher than yesterday's low. Yesterday's low was a double bottom, was a weak low at 43.10 in the S&P. Be sure to mark that 43.10 as a weak low. Yesterday, strong expectation for that to break by the end of the day. But again, news-driven events don't really obey standard auction logic. So that's where we stand, and that's what we have for today. Cryptos took a big pop higher. The move in cryptos is being attributed to the fact that the SWIFT system was taken down by the West to most major banks in Russia, and therefore it is believed that people are going to resort to uncontrolled, decentralized currencies, the leader of which is Bitcoin. And so there's huge demand, a big pop for Bitcoin. I'm not sure if that's speculation or if it's an actual need. Who knows if sovereigns are using that to transact for commodities or whatever to trade, but this is really what crypto is created for, so that one or more countries do not control the currency. And so we're seeing this move in cryptos this morning. Not a surprise. I am still bearish on Bitcoin. Since the fall of last year, I've posted about it quite a bit on Twitter, and this is a pullback to minor resistance here in the 45 to 46 area. So we'll see how it does. If it pops through, great. If it doesn't, great. I don't have a strong opinion in either case. It's just another auction. Um, so that's that. A quick look at, I just want to take a look here at what we have in the overall picture. So overall, the S&P came back to its monthly VWAP. The monthly VWAP really is was at 44.15 yesterday. We start a new month today. The Dow almost came back to its. The Nasdaq came back to its yesterday, and the Russell has been snaking around its monthly VWAP. So here we are starting the month with a baseline with a VWAP at 43.57, below where it was before. We'll see if it stays above or it gets below. We're seeing a strong pop in the bonds and the 10 years here. We're seeing those continue higher, which forces yields down across these products. And what this is doing is money's moving into safety, and money's moving into safety, and as a result, the yield has to come down. They don't, when there's demand, there's the coupon remains the same, price goes up, and so the yield goes down. And so now we may see this supporting the overall market, believe it or not, despite the headline risk. In my opinion, as I said yesterday, there's a significant amount of pressure to push higher going forward. Crude, again, popping through that 100, just skating on its monthly VWAP all of last month. The gas was really strong at the end of January, and it really petered out, came back to $4 throughout February, and hung out at $4.50 throughout February. I expected this to really take a pop higher, but notice that gas is not really making a move here, which is really odd because they did shut down the Nord 2 pipeline, and of course the supply from Russia is likely to be disrupted into Europe, so you would expect the supply to go down and prices to go up, and this is oddly not moving at all. So that's where that stands. Let's take a look at what we got yesterday. I wanted to point one thing out. One second. I was looking intraday this morning at my order flow chart, and I was noticing some anomalies. I don't have time to go over that. So yesterday, what did we do? Yesterday, just as expected, remember I talked about it opening in range. We're opening below this big upper distribution here. 43 being key. And so what did we do? We open and we are chopping around the 43. So we chopped all the way down. Well, it's true, but it's the whole thing has fallen apart, right? So that supply is never going to come online. I don't know that much about it. This is just headlines I was reading. But 43 was the key magnet or the key price yesterday. This is the key balance area. And what we had is we opened at 23, tested to 21 and a quarter, and immediately popped higher. And it looked like buyers would have it. And so the target yesterday was the prior VPOC, Friday's VPOC, as well as the settlement price of 43.80, which happened to be at the same price. This rotation down into the open is just so off-putting. We're seeing that a lot, where we see these just stunningly perfect setups, and then it takes it out and it looks like complete failure, and then it ultimately ends up taking out its target. Again, what you're seeing in front of you here is just typical of headline risk. It's just, the market makes some pretty good headway in a directional trade. The auction is pretty easy to read, and then we suddenly get these precipitous falls. They hold. VWAP's been held quite a bit. The mid's been held quite a bit from below, from above, and so on. So yesterday we ended up with a break of the IB high. We ended up pushing and getting the prior settle stat, the prior point of control stat. We pushed through the prior high, and then we petered out, pulled back to 43.80 and sold off from there. And then we went neutral on the session. We ended up pushing the market down to 43.10, this double bottom right here. There are two bottoms at the same price of 43.10. We ended up pushing below the IB, holding the open at 23.50, and then getting above the 23.50, holding the 23.50, and it just became a chop fest. So yesterday was easy to lose money after some pretty decent trades. It's what I've noticed is it's hard. It's become relative, unless you caught this pretty directional move higher of about 50 points, it's relatively hard to hang in there with the runner. I'm seeing runners come back to their entry quite a bit. So it's really touch and go trading. Coming into today's session, we ended up finishing in this upper distribution of Friday. So we continued a little bit higher. We pushed yesterday's high to 43.99, and then off to the races it goes. As we've seen, as Europe opens, when Europe opens, the market has been selling off pretty regularly, and so we sold off. We created a multi-distribution profile. There's still some active price discovery. We're still battling this 43.43. I'd love to see us move away from here. When we have such a high volume node, I talked about this last week, the tall grass versus the fairway in golf. The tall grass is the high volume nodes, and when the ball hits the tall grass, it tends to lose a lot of energy. It tends to kind of get stuck in that area, and this is the market getting stuck in here. You can see there's quite a bit of trading that's occurring in this zone here. From about 43.50, 55 down to 43.30, 25, and we continue to chop around here. So this morning we're opening right inside of yesterday's odd-looking profile. This odd-looking profile, we're opening right in there, and so we're expecting chop. The test of this mid was actually a really nice setup. You can see it here on Edge Pro X right there. Pretty nice setup. Why? Because we had prior price structure there. Oops. We had prior price structure here. We have the mid and the VWAP against a stock zone. This is a solid structured setup to short around the 43.55 area, looking for a rotation to at least 47, if not 43, 43, 43, 44. This is what's expected here, and it's kind of pushed its way to 65.50, which means a stop out. But overall, it's struggling to get above the mid here. It may squeeze. We're likely to get the prior settle, but what we're doing is we're opening again inside of the prior day's range, in or around the mid area. and VWAP, the full session VWAP, full session mid. So we have the overnight point of control of 43.50. We have the mid at 60. We have the VWAP at 57, and we're opening in what I could call, and hopefully no kids are around when I say this, I'm giving you 2 seconds. We're opening in what is called a shit sandwich. So it looks good. It looks like we have a setup here. It looks like we have a setup here, and it's just muck in the middle. And so I'm expecting that this morning the open is likely to be aggressively choppy yet again. With headline risk, it's no surprise. It's no surprise that it would do that. But if it does get above the prior settle, we're likely to push into the 80 and then make our way into the 4400 to 4402. 4402 is a big low volume node, composite low volume node, and is expected to show resistance initially. So any push into 4402 is like I'm looking to sell that back towards the 4300 handle, somewhere in the 95 to 90 range before it continues higher. You can see the delta was negative and it remains negative for the session, and that's how we're set up. So we're on top of this pile of high volume. We are below mid. We are at VWAP. We're above the overnight point of control. And again, we have this composite point of control beneath us. So that's where we're set up today. So I'm going to tell you the same thing today I told you yesterday. And that is, with headline risk, you do not want to extend your stops. You don't want to give trades more room. You want to be in and out, in and out. You want to just be moving quickly. You want to be moving quickly through your trades because it is just not. We're not going to be the first to get the news, and it's just not predictable how this massive risk overhang is going to be treated in terms of hedging. You know, when you have a big stock portfolio that you don't want to liquidate, which is very expensive to do, by the way, then you go into the futures and you sell futures. Why do you sell futures against the long stock portfolio? And I'm speaking from an institutional perspective. It's because you only need a fraction of the value of your stock to be able to hold the futures, and there's no limit on shorting them. So you only need a fraction. You know, the margin per S&P contract is relatively much smaller than the actual cash value. So to a fund, it just makes a lot of sense to go and put on a trade in the ES. You currently need about $11,000 per contract, and for that $11,000, you're controlling about $220,000 worth of S&P stocks, or you're hedging approximately $220,000 worth of exposure per contract. You're only putting up $11,000. That's the full initial margin. $11,880 is the full initial margin for the S&P 500 minis. So for that reason, this is why we're seeing, as the market moves up, we're seeing, or it could be why we're seeing, as the market moves up, these big prints to sell. These are hedges that are eventually going to likely be bought back. So we'll see how that goes. I'm not going to put lines on a chart today. The general map for today, let me show you that, and then you can be on your way. Here's the general map for today. So this is your major over under, and that's the prior week high, prior week settle. So bearish under here, very bullish above that 4380 area, which we tagged yesterday. We have 4400 as a key low volume node, key test area here, marked by this stock zone. We have the magnet remains at 43.43. The key support remains at 42.50, and the key resistance remains at 44.50, where we also have some single prints up there. So 200 to 200 SMA, as well as single prints as well. That area is designated as the key resistance on our move up. This represents about a little over the 1 sigma, so it's attainable. There's the 1 Vala sigma up right there. So today it's likely to be a chop fest. I believe it's going to attempt to test lower, and then I'm looking for it to push into that 4,400 area. I am bullish this action, despite the selling that's going on, despite the risk-off sentiment in Europe, despite the rally in the treasuries as a risk-off instrument, and in gold and energies, I do believe the market still shows a fair amount of buying strength, dip buying type of thing. The market is betting that this is likely to blow over. This is what I'm expecting. I hope that helps you. Good luck today, and I'll catch you tomorrow morning. For Convergent members, remember this is today's our monthly AMA. Make sure you submit your questions before 12:30 Eastern. The member AMA starts at 1 p.m. Eastern today. Take care.